A modern economy only really works if it has a modern banking system. So what do banks do within that system? The first thing they do is they take deposits. So the bank is a secure home for a customer's deposits. They then take those deposits and they lend them out. They also create credit. So if you think about a bank, it has an amount of capital and it multiplies that capital a number of times, 20 times, and 20 times the capital becomes credit capacity, i.e. lending capacity. And the last aspect of what a bank does is it manages the payment system. So when you make payments as an individual or a company makes payments, it is essentially an electronic transfer mechanism managed by the banking system. If you have a mortgage as an individual, you've borrowed that money for 25 years. What the banking system does, it takes short-term deposits and transforms that into long-term loans, like mortgages. So what the banking system does, it takes the risk for society of essentially borrowing short-term and lending it long-term, and that's called maturity transformation. Within that, there's a risk of something called liquidity mismatch, which again, the banks also take. Come to SMEs. Banks provide credit to SMEs, working capital facilities or other loans. SMEs, we know, are the engine of job creation. So as banks provide credit to SMEs, they provide the necessary financial fuel behind companies who then employ people. Think about international trade. If I'm a company and I make some goods and I export those goods, that business is funded by the banking system. The banks will lend the money to the purchaser of those goods and provide that money to you, the seller of the goods. And lastly, they would, taking that example, protect you for foreign exchange risk. So if you're making goods in England and you sell them to America, they're sold in dollars, you have a price that's in the contract at X dollars. Now what happens between the time of the contract and when the money is received is the exchange rate moves between dollars and sterling. And what a bank will do will offer you protection against the movement in the exchange rate and essentially allow you to, quote, hedge that risk, to manage the risk of international trade finance flows. A bank isn't some sort of separate business. It has to sit within the community and be trusted by that community. And the banks have got a long way to go, I think, to rebuild that trust. Being part of the community isn't only about the financial support, it's also important to play a role in other initiatives. And here in Standard Chartered, we use Seeing is Believing, Living with HIV/AIDS, Goal, a series of community initiatives to demonstrate that we're clearly part of the society that we also provide, I think, very good banking services to.